fuck?
Through twisting
uh, all right, so we're good now. Perfect. Hell yeah. All right, hold up. Just really happy right now. We got a rainbow wheel. Yeah, you don't hear nothing because I'm not talking yet. Wow. All right. I'm trying to record it, but this isn't gonna work out with Snagit. Yo, you can hear me? All right, perfect. All right. Got me tripping. All right, so I'm gonna record it now. We're good. Finally. Actually, no. All right. So now everything's gonna get recorded. We're now switching. We're in it. All right, this is gonna be dope. All right, so welcome. This is Ryan here from Forever and Profit. Basically, I want to teach y'all how to really perform and execute on these charts. Mainly, I want to get into a little bit of psychology. Main thing is, a lot of people, when they start trading, they don't understand that trading is 90% mental, 10% technical. Okay. A lot of people, when they come into the trading industry, they feel that they have to trade this aggressive style. They have to come in, throw a lot of money down, and they get rich. But it's not like that. It's really get rich slow. Trading is simple. It's not hard. It's not easy. By the end of the day, it's simple. So you need to understand step one, trading is 90% mental, 10% technical. How do you recommend you write that down? You understand where I'm coming from with that. All right. Just have the right mindset. But overall, when we start trading, we don't use the N1 chart. Okay. The reason why we don't focus on this N1 chart is a lot of reasons. And one of the main reasons is that with the N1 chart, it's very, 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 very disorientated. you have a lot of moves that happen here, but in reality, it's 60 candles literally to make a 1 hour. We could just break that all down with 1 hour candle. Okay. And one of the main things is when you're using the M1, M5, M15 chart, you're going to be more not accurate in your trade setups. You're going to be losing a lot more money than you think you're going to be making any type of money. So a lot of traders, when they see, oh, scanner, I'm going to go trade on the M1, M5, M15. No, that's binary options. We're not trading binary options. We're focusing on Forex. So to understand trading with those versus trading the M30, H1, H4, the daily one, the weekly one, the monthly chart, you understand that the higher the time frame, the stronger the trend. And to understand that the stronger the trend is going to make you more money. And when I understand that, and the reality of the whole entire market was that I had my breakthrough because I knew if I enabled day breakers and I understood this hour chart, I will understand that it takes 24 candles to break up a day. Okay. 24 candles will break up a day. And the reality is the same moves happen every single day. Every single day. It doesn't matter where. It's echoing. At the end of the day, the moves happen every single day. So ultimately, you will see trends literally happen. It'll start from the weekly low, for example, right down here. Give you a better picture. You want to find a better pattern. I love doing this, especially just like new people, coming to trade. All right, when it's new people coming into trade, they don't understand these trends. They don't understand the story that goes behind the market. And I want to go break down Euro USD to the most best of my ability. So I want you guys to really take notes. This is my favorite chart. I made all my money off of Euro USD. A lot of it. I'm a high risk trader, by the way, so don't get crazy with what I say. Just understand with what I say makes a lot of money. So we're gonna bring out RSI. Taking notes. I use RSI 5. My settings on RSI 5, so you guys can see it. It's period set to 5. My levels is a 30, a 70, and a 50, and that's pretty much it. I don't use this for overbought, oversold areas. I use this for only one thing: divergence. Okay, a lot of people don't understand what divergence is. Now, with an RSI oscillator like CCI, MACD, RSI, TDI, stochastics, all of those stuff, okay, is just really telling you the momentum inside of the market. The momentum inside of the market, where the banks, your institutions, your hedge funds, all of that is what RSI oscillators like TDI is. It's not about price movement. Candles, that's price. This is momentum. These are where the banks and institutions are moving. We're trading price. To understand where the banks are moving, okay, or to understand where the institutions and the big players are moving, you need to understand this, not for overbought and oversold areas, but to understand in the overbought and oversold area, you're looking for only one key element, and that's called divergence. All right. So how do we do divergence? It's very simple. You do your setup. So you guys can see this. Divergence is, first of all, is when price is doing the opposite of what momentum is. This, see right here, is going down. I want you guys to really figure this out. RSI is set to 5. And then I just add a 50 level to it. Yeah, sure. Hold on. RSI, it's pretty much it's set to period 5. Then I have a 30, a 70, and a 50 level. And that's pretty much is. How do you add a level? You go to add and you just type 50 and then you're good to go. I'm gonna type that out. RSI 5. RSI 5. All right, to basically bring up your indicators, if you guys don't know how to do it in a shortcut way, no, it's not the scanner. I don't have the scanner on this computer, so there won't be no scanner. You go to indicator list. Once again, double click indicator list. You bring your stuff up, and then you have your settings perimeters. You're setting that to 5 levels, 30, 70, 50. You need to add a level, and you add your 50. That simple. All right. Yeah, y'all gonna learn. This is what I came to do, to teach y'all a little something, you feel me? But I'm gonna give y'all some real nuggets, like just to help y'all out. All right, so back to RSI and price. When momentum is doing the opposite of what price is, as you guys can see here, I'm gonna zoom in so you can see it better. All right, price right here was going up while momentum was shooting down. That is divergence. You can see it perfectly right here. Okay, I'm gonna mark it so you can see a more visual approach of it. All right, see that? Price shooting up, momentum shooting down, banks, everything is already selling. They were selling. See this drop? They were shorting it. Mind you, this is on an hour chart. I don't use these charts. I use the H1 and 30 occasionally. But right here, this was a stop hunt. This wick right here was a stop hunt. Yeah, it's getting recorded. Right here, this wick was a stop hunt. And since it stop hunted, it was basically saying, okay, people that keep thinking that was gonna be a buy, people was selling right here. They trapped the buyers. People started selling it. They put like a little stop hunt, let's say about 5 pips, 10 pips out. And they went up and grabbed it, hit the stops, and then it dropped massively. And right here, it tells you it was going to drop because of divergence. All right. And one of the things when you notice about divergence is you catch them on maybe reversal setups where the money is really, really made, which is my favorite, swing trading. So I just wanted to show y'all divergence before we get into how this even unfolded, which is also a head and shoulders pattern. Shoulder, here's your head, and here's your shoulder before the big drop. To understand these weekly highs and weekly lows, when they actually do a maybe reversal, you need to understand divergence comes into play for exhaustion of the market after it's done doing its pushes. So with that being said, right here, we have our pushes and maybe reversal resets. So I'll basically show you what I mean by that. Okay. This is going to be one push. It's three. The market's made up of 3 to 4 pushes. Usually you can see 3, and then you can have your 4th push here and there. But usually you're gonna see 3 more common. So as you can see, the market did 1, it did 2, it did 3. This was your weekly high at this top, and it played out with exhaustion of divergence, where we went over here, and the market decided to push up. So right here, you see 1, and it failed, and it resetted, and it did a bigger drop. And I'm gonna break down how this drop actually formed. Right, so right here we had a reset, 3 levels of drop. Right here, resetted. It was in a strong area of supply or resistance, however you want to call it. Right, it tapped it once, tapped it twice, right here, and it tapped it 3 times, 3 hits, 3 pushes, 3 hits, and then the market just dropped, as you can see. And one of the main reasons of the market dropping was mainly not just because of the pushes, it was mainly off of a head and shoulders pattern. Right, so now that we have pushes and we understand that this is a resistance area, supply is the roof, resistance is the roof, and then our areas of demand, which is support, will be underneath this. So when the market came back to this low, okay, you can see how it bounced off, and it takes a big candle to break it. And in this case, a big candle broke this. And that, from the reset up here, 1, 2, 3, came up one level, resetted, it failed. Like I mentioned, I'm a price action junkie. This became level 1 push. The day breakers are usually used to determine, taking notes of this is one of the biggest things that you could take a note of. Is that when using the day breakers, it basically indicates the market. My bad. All right, so basically what the day breakers is that it indicates the market for its pushes. Without these, you will see the market a little differently. You'd be like, okay, I don't understand what I'm looking at, but you add them on, you see the pushes. This is, each day breaker consists of 2 days. So this might be like Monday and Tuesday. This might be Wednesday and Thursday. You catching mimic reversals on Tuesdays, Wednesdays, and Thursdays. Once again, you're gonna catch your mimic reversals on Tuesdays, Wednesdays, and Thursdays. Where you're gonna catch it at the weekly high and then run all the way a week later to a weekly low, or the weekly low and then run for a week later to a weekly high. So in this case, it did a reset right here, ran for like pretty much a week, came up, and then it did another drop. So right here is your level 1 drop. This will be a level 2. Then it reset it once again a little bit, and then it came down to a level 3. Then market went up for 1, 2, resetted, then dropped 1, 2, 3. Here's your 4th push, and then it went up. This is all going to be recorded. I'm just basically running through how levels work out. You're looking for your 3 and 4 pushes. A reset only contains a 1 to 2 pushes, and it basically exhausts. Not a lot of people know that, so they get inside trends and they get chewed out because you never want to place a sell in the buyer's market. You never want to place a buy in the seller's market. You want to always run with the trend, and you can mainly see trends with double tops and double bottoms, news events, FMOC, NFP. News definitely interferes with it, but what I always tell people is, go on Forex Factory. Maybe go on Forex Factory and that's Forex Street. All right, so to go on Forex Factory, to go look at your folders. Red folders, high impact news. Your yellow folders, I don't really focus on those. Orange folders can have some effects. However, I believe yesterday was FOMC, 2 days ago. It actually was yesterday. All right, so yesterday was FOMC right here. It's 2 p.m. release of news. I'm gonna get back into this later. Notice it doesn't have no actual. Okay, there was no actual or a forecast or a previous. This is why it's super high impact. It's red. You don't really want to play with that, and that's what the big push really was. All right, so back to understanding these pushes. You can basically draw your supply and demand zones better on an H4 chart. This is what we call a head and shoulders pattern. Once again, that's why the market dropped so aggressively to the low. In reality of that situation is you could have caught crap ton of pips. If I tell you how much I caught on here, y'all won't believe me. But at the end of the day, I caught about 20 grand. And then just saw a news event called IMF. I got out, I got scared because it was supposed to push this up. In reality, the news failed. It wasn't a really good release and it dropped. Thing is, I had over 40 lots out here. If I left it in, I would have did $500,000 within a month. I don't want to talk about it too much, but the reality of the situation is it's all about timing. Catching these type of events, understanding the technical analysis that goes behind it. So you understand how the market would drop. I want to go into more depth about, getting into support, resistance, supply, demand, how the market decides to retrace, all that fun stuff. But at the end of the day, all this is great. But in reality of the situation is, I don't know if y'all could really draw. So what I want to do is really break down supply, demand, price action, support resistance, go into more in depth about divergence, break that down to full details. I'm just giving y'all a summary. That was just an introduction. That really wasn't really me teaching. So, I really want to go into depth about those certain things. So right here, this is FMLC, by the way, the red folder that we were just going over, which was this news where it didn't have no actual forecast to it, and it shot up. If you got in at the close of that candle, could have got about 297 pips. A standard lot there would have been $2,970. But you have to do risk management, so I'm not gonna talk about that stuff. I don't want to get in trouble. But just focus on how they teach risk management inside IML. But the main thing is, I want to teach y'all structure. One of the main things about learning structure is understanding and zooming out your charts. Okay? You need to understand zooming out your charts is one of the biggest things to understanding structure in the market. A lot of people don't understand that process, and it kind of hinders their trading success. And I don't know if y'all know this, wicks play a major role in the market. Wick from over here, zooming out, as you can see, it respected this over here in the future. News is really derived of events that's already occurring inside of the market, which is eventually predicted to be effective later on in the future. In a nutshell, the market already predicts the news before the news even comes out. So when you see economic crisis, stock exchange, markets crashing, all that stuff, if you guys understand technical analysis, news just completes the pattern. You already know what the pattern is going to do if you know how to draw on your charts. So when the news release hits, you already know the direction off of two things: time zone trading, technicals through support and resistance, trend line, supply demand, higher time frames, mainly going up to like the H4, mainly staying on the H1, and understanding how to get between all of those factors inside of the market, so you can understand when the news do hit, you know where the market is going to go. Okay, so right here, for example, I'm drawing right now just on wicks, so you guys can see support and resistance areas. Like, I'm not lying, like the market really does this crap. So you look, wick, market breaks it, and then look, market breaks it. It takes a big candle to break that. So when it came back here to test that structure, okay, as you can see, it comes back and tests that structure. The market decides to continue to break it. Big candles break it. This is only zoomed out. When I zoom in, it's a whole different story. So if I want to figure out what the market's going to be doing right now, okay, is that an area of resistance? Supply, demand, all that stuff is just zones of support and resistance. I could go all day drawing on support and resistance areas, but the topic is, just understanding the structure. So this is basically step one, understanding structure. I love H1. You see me draw my whole life of Forex on H1. All right, so I did enough drawing on this left side so you guys can see how it, eventually goes into the future in the market. It's not no myth, it's reality of the market. All right, so we zoom in, and we see how all of this plays out beautifully. All right, so wherever the hell I drew over there on the left, you guys can see how it respected right here. This is NFP, stop hunt to the low. Market came up. And the only reason why I know that's NFP is because I traded it. So I know where it's at. This is NFP. Stop hunting to that low. Hit the structure. Look, it shot right back up. That was a news event. Market shot through. Look, it takes a big candle to break it. And look, it retraced right back through. It broke through the structure. Once again, this is all structure. So when we're trying to draw our supply and demand zones with understanding all that structure, you go to the H4 chart mainly, and you take the square. Now people's be like, how do you get the square? Look, all right, so you double click here, you go to customize, and in this box, you're gonna have shapes and sizes. So eclipse, let's say if I wanted eclipse, I will insert it, and now I'll have eclipse pop up here. I don't use that, so what I do is, I'm gonna remove it. And that's how you get your shape. So in this case, this is how you get the squares. Squares are used to use supply and demand zones. So right here, what we're doing is we're taking the box and we're gonna drag it across on the H4 chart. And how do I get that? It's very simple. Why did I draw it like this? Where the wick is extended at the low, you can take it to draw it to the tip of the body. Make sure it's a little accurate. I mean, zoom in if you have to. All right, perfect. All right, so right here we have an area of demand, aka support. Okay, none of this is resistance. This is all supply. I mean, this is all demand. This is all support. So what happens is the market got in and came back out, tried to break it, went back out, tried to break it, finally broke it, and decided to go right back out. Now, why was that? Because there was another area of demand down here. Okay. Wick to tip of body. H4 chart, I would love to draw my zones. All right, so H4 chart, I love to draw my zones. Right here, we have an area of support. As you can see, the candle literally came down, touched it. Okay, it touched it, and then it shot right back up, and it broke the zone with a big candle. Can't make this stuff up. This happens every single day. You can see it right here in the H1 chart as well. And here's the fun part. That came from a weekly reversal. So right here, I'm gonna bring up the weekly reversal once again. Structures at the low, this is a double bottom. Okay. We have a double bottom formation right here, and the market shot up. Also, we have an area of supply and demand once again. You can draw it on H1 too as well. I'm getting text messages out the world. All right, so right here we have an area of demand. Trading is very, very boring, by the way. When you get really good at trading, trading is boring. It's not fun. It's boring as shit. So right here, once again, the reason why I drew it from here, that was body, there was wicks, and this is where it ended before it went up. So what I did was I took it from the wicks and I extended it to the bottom part of this body and extended it into the future. Notice where market came back and tested that zone. It hit 1, 2, 3, and then reverse. It came back and tested a strong area of support before it shot up. Not only did it do that, okay, it was oversold right here before it shot up. Oversold right here where it tipped the zone before it went up. But we still understands that it was in the downtrend. Plus, it was a double top. You don't want to buy on the double top. Right here is double topping. You're waiting at the weekly low for that buy. Now, how would you have known that was a weekly low? By the pushes. Very simple. You would have expected the buy off of the pushes. H1 chart. Remember, levels. That's level 1. Here's your level 2. Here's your level 3. Right? You got your 3 pushes, and then where the market is at. The market decides to shoot up after its 3 pushes. So when it did a double top, you knew it wasn't time to buy. You're waiting for that double bottom. The structure was not really fully set, and they were retested that low, and there was no double bottom for you to buy yet when it did a double top. So you're patiently waiting. That goes back to 90% mental, 10% technical. You had your markup, but you wasn't ready yet. So impatient people will buy, and then it'll go down, and it's not really fun because when you get to trade highlights, it's nuts. 36 pips negative before you would have went positive. Your goal is to wait. A nice healthy railroad track right here. Okay, so now that we have the 3 pushes, we understand that it's going to be 3 pushes up before it goes 3 pushes back down, right? So right here we have level 1. This is how you trend trade, people. Okay, it's understanding the pushes from the market. 2, look, 3. There was no double top yet. So what do you think the market has to do? Finish the double top. Yo, what's good, Elijah? All right, so all right, so right here, there was no double top. So the market has to go complete a double top. How is the market going to complete the double top? 1, you have a zone. Okay, stand out to the future. All right. You extended that into the future. That's your double top. And right here, as you can see, you did a 4th push. 3 to 4 pushes is the rule, right? Here's your 4th push. Hold up, Mom. One of my business partners is texting. Give me a second. All right, my bad. All right, so right here we have a 4th push. So we got 1, we got our 2, we got a 3, we got a 4. Now let's get a little bit more fun with it. You take out trend lines. Here's your wick. I take the from the body of the bottom candle and I draw my trend line from the low to the high. Here's your wick. Boom. Now you see how it trends? So right here, let me bring out those eclipses. Ah, man. Let me get those eclipses out. What color is this shit? Oh my God. Let's go with gold, orange, whatever. Now y'all probably wondering why I brought this out. It's really just a key point areas. So we have right here where the trend line started. Art of technical analysis. I don't know why it's glitched up. MC4 is crap. All right, so anyways, yeah, it doesn't matter if it goes through the body of the candle. That doesn't matter. I'm gonna explain why. This is about to be mind blowing for y'all. Well, for some of y'all, a trend line is valid when it has 3 touches. Wow, this clip scrap is kind of horrible. What the hell just happened? My bad. All right, I'm really trying to drag it, but it's kind of stuck. All right, screw it. So right here, you see it did 1, it did 2, and then it did 3 touches. Bang, right? Look how valid it is. You got your 1 push, you got your 2 push, you got your 3 pushes, NFP stop hunts. The wickedest candles on a lower time frame. Correct. That is 100% correct. And you're an FIP. You know it. All right, so right here, you got your 1, your 2, your 3, stop hunt to the low with NFP. And I kind of sold this because I knew it was the 3rd push. I thought this was gonna be the double top, but it was failed. I got out anyways because I had the trend line. No, wicks are basically on the H1 chart are candles on a smaller time frame. Example, all right, here's a wick. You guys can see candles on the M15 chart. Give me a couple of seconds. There's a reason why I don't like the M15 chart. I hate it. All right, see all these candles right here? That wick, as you can see right here. Yeah, like y'all don't understand. I have 11,000. I have 1,000 students. This is why I'm recording this session for y'all because I'm really behind on work and a lot of other things for my group. But I have quilling. Y'all definitely have quill. All right, so these wicks that y'all see on the H1 chart are just basically candles from the smaller time frames. Remember, this is the same eclipse where it says number 3. Look, I'll even prove that by dropping an X right here. All right, that's horrible. Let's just drop the X right here. X marks the spot, right? Bang. So H1, see that? One big wick. Feel me? So in reality, it's my template. I'll give y'all my template in the GV group. This same template, I'll drop it inside the GV group later on. All right, so swing high and swing lows. You take, first of all, when you do your trend lines, make sure your trend line properties are set to perimeters. You go to perimeters, and you make sure array is selected. That's 1, okay? 2, body of candle or wick of candle to the low, extended to the first newest lower low from the trend going up, okay? So this is just a lower high. So what I did was I'm gonna draw the trend line again for y'all. I'm gonna delete it, I'm gonna draw it. I took it from here. See where I grabbed my crosshair? I grabbed it and I connected the crosshair to the bottom of this wick. And then look how it basically respected it into the future. Okay. So it got 1, 2, 3. It respected it. It finally broke it. And then look, and now that same trend line that was once support is now resistance. See, we got support, 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 breaks it, resistance, comes down. After 4 levels of rise, it drops level 1, level 2, level 3. Let me mark that out. Like, now y'all seeing how trends are basically made of. So when y'all trade off the harmonic scanner, the harmonic scanner is giving you a pattern, and it's saying buy me. And you understand these levels. You understand these trends. You understand that the system is basically made up of the same crap we look at every single day. And the scanner pops up a trade, and you perform your technical analysis with it, you are going to be 95% accurate. Now, obviously, you're going to use risk management. You're going to have people like me that don't use risk management, but it's because I understand the structure. When you understand the structure, you take your risk. In life, you got to take a risk. If you got money to play with, you can take the risk. If you don't got the money to play with, please don't take the risk. It sounds stupid, but Risk takers is what makes the things happen. Risk takers, risk takers. My empire of trade was built off $100, while I was only making what 375 a month. I had bills. I had a horrible start trading, but it doesn't matter. I risk the hell out of my accounts because I know how the markets move. But it's not about me. I just want y'all to understand the structure. Bang, 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 bang. All right, so I'm just going through the chat real quick. All right, for sure. I don't even know how many people is in here. I don't really care. It's getting recorded. So right here we have 1, 2, 3, 3 pushes. Here's your fourth. We waited for the double top. It confirms. Check mark. Double top. Right. Boom. All right. So we're good to go. We got the double top. Check. So now, honestly, when I just first started trading, I'll mark my charts up all the time. All right. So I'm marking my charts all the time when I first started trading. So I'll know where I'm at every time I log on the computer. Like, okay, today we already did a third push. There's no double top. I know where I'm at now. So where we're looking at, we have the fourth push. Now check that, mark that off. It's a double top to confirm. So we got level 1 drop, level 2 drop. Okay. So we know it's not ready to go. It looked like it was a double bottom, but look, it touched the trend line and became resistance. And it hit that supply zone as well. And the market dropped even more. Now, if I was to get a trend line from this high and drag it to here, I will understand when this shot up, it takes a big candle to break it. All right. So right here, it's level 4. We got 1, we got 2. Here's your level 3. 3 pushes. Notice I haven't even been looking at this crap because I understand price movement, price action, specialty, price action. You can draw your channels, you can do whatever you want, but this is basic crap. So right here, when price decides to go down, there's 3 levels, and it decided to act as resistance inside that supply zone, and it reversed off of it. You knew it was game time to take a short. I did have a short in, and I caught that. But here's the thing: when it did its third level right here, and you got to the M30 chart, because you could use it at 30 chart to understand. So look for your double tops. If you don't see it there, like boom, here's your double top. The market drops. Right here, there was no double top, but it was just in that strong area of resistance. And the market just drops. And then look, Doji in the middle hit the zone of demands. It shot up. What's good, homie? It shot up. And then we could get an area where we could drop a little resistant line here in this case. So right here, technically support, and then boom, it acts as resistance. That's why it wicked down, pulled back, it got in. So market gets down, gets inside that demand zone, it's structured, then look, it shoots up. And it takes a big count to break a trend line, and it takes a big count to break a demand zone or supply zone, and it takes a big count to break a support resistance horizontal line. So once again, it takes a big candle to break a supply zone or a demand zone, which are these shaded boxes. It takes a big candle to break these trend lines, okay? And it takes a big candle to break a support or resistant line, which are these horizontal lines. And that's exactly what the market did. No, the M30 isn't my go-to. My M30 is like if I know for sure where the trend is going and I want that accurate trade. So you see right here, it's just one big candle. The M30, I would have just went to it just because the M30 told me a story right here. It took an hour for this to form, okay? Doji, candle, 30 minute, total hour. So on the hour chart, you're just going to see it close. When this happened on the hour chart, by the way, I knew it was game time for a buy because it retraced too far in. YH1. The higher the time frame, the stronger the trend. That's one. And two, when you trade on the M1, M5, or M15 chart, they're not accurate. They're not good. I hate them with the passion. And to break it down, it takes 60 candles on the 1 minute chart to make up 1 hour. When you can just look at one candle. All right. The M5 chart, it takes damn, I hate math. Oh, in case if y'all ain't know, I failed math 7 times in college and I dropped out. Anyway, so takes 12 candles to make up an hour, pretty much on the M5 chart. Whatever, I don't really care. Fuck that shit. I hate math. Proven. It's proven. All right, so wow, yeah, that just happened. Yeah, all right, so yeah, 12 candles in that pie chart. Where do people get 20 from? Y'all just mind twisting things. All right, so wow. I think a lot of people here hate math. Oh, snap. All right, so the M15 chart, I don't use it at all. It takes 4 candles to make up an hour. Man, you could just use 2, and then right here, the M30 chart, 2 candles to make up an hour. When you just look at an H1 chart where it takes just 1 candle and you're good to go. And an M30 chart, here's just you have a better, you can see your dojis and crap. Or if you, let's say you're looking for the double top or double bottom and you don't really see on the H1 and you feel that it's happening on the M30 because your levels are completed, you could go to the M30 chart and then you can see like right here in this structure when it did level 4, you see right here it kind of did like a double top, but right here it did like another one right here. It drops and it spiked on it. Because when you see a double top or a double bottom, you never really want to trade in the middle. You want to trade the last legs. Okay. You want to focus on the last legs for one reason. That's where the money's at. In between is the trap. The money's in the last leg. So you double tops the double bottom. See right here? Boom. That's your money. Here's your money. In between it is the trap. So let's say you took a sell. Next minute you're like, oh my God, what's happening? I'm spiked out. What is going on? I'm negative as hell. And the reason was, did you see your double top form yet? No. Okay, so why you in your trade? Yeah, but that goes back to patience. So right here, your last leg, right here is your accurate setup. So you boom, you take your sell right here, and then you would have cashed out. And draw it out. I didn't even go with time zone trading, but right here, you would have caught 95 pips. 95 pips from level 1 to level 2. All right. So that goes back to patience. Anyway, so the third level, as you can see, market pushes, breaks out, and it pushes past the resistance of all this crap. The market comes back. Now look, that same trend line, it decided to break, became resistance a little bit, and then it finally bounced off of it as support. Then just drops. It just drops. There's no questions about it. It just drops. So we go to the H4 chart anyway. So we're gonna go figure out, more setups, zones. Like here's a zone. I can see it from a mile away. Right here, I take a square. Once again, as you guys can see, wick is in this area. Here's your candle body. All I'm doing is dragging that, pointing it down. And then boom, drag that. People be like, wow, see that? I just dragged it. All right. I'm gonna get some McDonald's after this too. I don't eat healthy. All right, so right here, I put a horizontal line. How do you decide your take profits, or do you just write it out? I write it out, or I just close when I'm satisfied. If I told you how many lots I trade, you will understand that. But it all depends on your what you're satisfied with. You enter on the setup, you exit on the setup. You do not focus on the money. You don't focus on the pips. Okay? Focus on your setups. I trade 10 lots. I get paid $100 per pip. When I'm not really in a mood to trade, I'll trade like 2 to 5 lots. We're looking at $20 a pip to $50 a pip when I do that. All right. So we're going back to this area. Hold on. Oh shit, this is dope. Feels special. All right, my bad. So right here, we understand that this area, this horizontal line, in reality, it's on resistance. I put it at the top of that wick, and as you guys can see, boom, it hit. It was inside of that zone of supply, and hit the resistance, and then it dropped. Came back in, tested that supply zone again, and then it drops. You can't make this stuff up. This stuff up, people. It's all about drawing your charts. Fall in love with drawing your charts. You want to make money? Fall in love with drawing your charts. Levels. I'll do levels right here. This is level 1 for starters. I know a lot of people are saying, I'm going short-term sell. I'm going to go long-term. I'm like, why? That's only level 1, baby. You're only a level 1 push. We got 2 more to go. When the market pushes over hundreds of pips, there is no sell when it does it in the buy formation. When the market drops hundreds of pips, I usually rule of thumb is 50 plus pips, depending on the chart. Your USD, if it pushes about 50 plus pips, it usually won't go back up. But if it takes a big candle and locks in like this and it closes, that's called a retrace. And it closes, keyword closes, fully prints. Hour expires, when counter time, and then you're good to go. But anyway, so level 1, okay? And then it decided to like consolidate because of that big push. Ah, man. All right, so it did a big push. And what it does, it consolidates. So the market does a big push, it consolidates. Market does a big push, it consolidates. And that's lit. All right, so when the market does a big push, it consolidates once again. I've been trading for 1 year and 3 months. I've been teaching for 11 months, a year next month, and I cleared 6 figures literally within, I believe, my 7th month of trading. I bought myself a BMW for 8 months of trading. I helped over hundreds of people, ridiculously amounts of people, but it's not about me, guys. It's not about me. It sounds, I hate sounding like that too. All right, so anyways, this is level 1 push, and then it consolidates after the big push, right? So level 1, it drops, level 1, level 2, level 3, just because of consolidation. So you could have kind of counted it out. Yeah, I bought it a day before my birthday. I'm 25 years old, but right here's your level 2. Bam. Well, now people be like, Ryan, how's that level 2? It made a higher high than this low. I soak in all this knowledge literally within 3 months of trading, off of literally staying inside my room the whole month of February. I've been through a lot of struggles, a lot of crap, but at the end of the day, but I'll talk that story another day. This isn't about the story time. It's about focusing on y'all so y'all can learn how to trade. Motivational wise, I got my big breakthrough with trading literally within 3 months of trading. So it just depends on how much do you guys want to study. Retention. Focus, study, draw. I literally draw on charts every single day, even on the weekends. Ex Darwin, when I was shooting with Darwin, by having pieces down here, I literally just drawing charts just for the hell of it. And 4, we're not going to talk about that. All right, so this is level 1. This is level 2. And then here's your level. Here's your level 3. I'm expecting to sell. Now, people be like, why you're expecting to sell? Not only am I expecting to sell because it's a level 3, besides the market been consolidating for all these hours, not only is it because it pushed level 1, level 2, level 3, not only is it been consolidating for all these hours, if you go to your day 1 chart, wow. All right, hold up. New chart, your USD. Pull this up. Let's go watch one chart. All right. No, I'm explaining that whole entire consolidation stuff right here. Anyway, so day 1 chart, you understand that we're in resistance, a heavy form of resistance. I need to break down time zone trading, BJ 8158. I'm gonna break that down a little bit. It's a certain time of day I come on to trade. I don't trade and look at charts. I know what time to get on and actually execute the market because it's called time zone trading. It's a structure of understanding how to trade. All right, so day 1 chart, resistance. And then we could draw another line up here for the hell of it. If it was to break this, you understand that's resistance. Plus, if we want to get all real technical, you could get a square, drag it here to that body, and just drag it to the future. See that body right here, top of the wick, body, top of the wick. Here's a double top formation. I'm expecting to sell. And if I pull up my RSI, we are overbought. Now, people will be like, how the hell are we overbought? This is called resistance to supply. Remember the banks, institutions, all that fun stuff? There is no divergence here. If it was, I'm like, yo, we can get ready to sell. I actually call it as a signal. But the reality situation is it's not done setting up. I don't even trade Fridays. I trade Tuesday, Wednesdays, and Thursdays. Okay? Tuesdays, Wednesdays, and Thursdays. So today, it's a Friday. I'm not trading. I'll be in the market next week, Tuesday, Wednesday, and Thursday. I have a strict trading plan. So anyway, so we get a trend line. And then we drag it to here. My bad. That's something I wanted. All right, so we get the trend line and drag from up here. When do you put in the sell? When you see the double top. Once that double top is there, you take that trade. Remember, this is on the daily chart. Okay, this is the daily chart. The daily might even close in a doji, and it might drop Sunday or Monday. Nobody knows when it's gonna drop until you see the double top. The double top right now, right here to happen on the hour chart. It looks like it kind of formed one, but I wouldn't take the trade until I feel more confident in the setup. Right now, I don't feel too confident in that setup yet. H4 chart, this closes, you could potentially take a sell, but it's 91 minutes left for that. And as you guys can see, it's clearly inside of that zone, and there's still resistance, heavy resistance. It never broke this line. No, I don't trade when it's overbought, oversold. That's just a confirmation. You never want to trade just on overbought, oversold areas. You want to trade when it's confirmation. It's called confluence trading. I didn't even go over Fibonacci's. That's a whole different topic. But this is just looking at price and understanding price's movement without having even Fibonacci levels. I need to show you Fibonacci levels in time zone trading, how all this plays a role. This is why it's getting recorded. So when you watch it, I want y'all to go back and draw on your charts so you understand how the market moves. And right here, for example, just on still the day 1 chart, you can kind of see how I took it from this wick and I connected it to this body. Look what happens. Market decides to shoot it's from this wick to this tip of the body. Look, it went through support, right? Bang, bang, bang. Look, hits it again, support, and look what happens. It shoots up. This same trend line, this was acting support, it acted as resistance at once upon a time. And look, it acted as support right here, and it came right back up. The higher the time frame, the stronger the trend, people. is reality. It's the truth. I don't make this stuff up. I literally just saw what I just a line off of the tip of this wick, and look how it stands. Okay, kind of like got a little funky here, but look, it literally tipped this and said, "Screw it, I'm out." Structure, precision, everything is calculated when you trade. Have fun drawing your charts. This is all just accuracy. Double bottom, and then you're like, "Why is it a double bottom?" Notice I'm doing this on the daily chart, by the way. Drag your zones all the way across. Body to wick to the future. Came back in, dipped, touched it, dipped, broke it, touched it. As you can see, came back inside the zone. Broke it with a big candle, like I mentioned, takes a big candle to break zones. Then look, came back in demands, breaks it, comes back in, breaks it, big candle, consolidation off this world because it's a big ass spike. And then it does that. So fun time, Fibonacci rule, 61.8 is your strong PRZ zone. Okay. The market, as you can see, when I dragged it from this low to this high, when the market decided to drop, it went to literally 61.8. And then the rule of thumb is when it reverses on 61.8, the next extension is 38.2. If it breaks 38.2, you can expect your fibs to reset later on. The drop on the H1 chart, actually, no, I'm going to H4. All right, well, let me go to it. You can see the drop. All right, so here we go. Put these on. Get your trend lines out. Crap. All right, so once again, we do this all over. That was spell. All right, so get your trend lines out, and you're just gonna draw your trends. It drops because right here's your double top. Double tops failed. Here's another one, failed. Here's one big ugly double top. Double tops failed. The double bottom went up, double topped again, and then boom. And then right here under the bottom, you see double bottom on your bottom. Right here on the H4, and right here, when it hit 61.8, it did a perfect double bottom. It didn't break the 61.8 zone, and then shot up. That's a great question. EENG. Not really. I taught myself how to count levels, so I do what works for me. Other people, they do the whole entire, wave 1, wave 2, wave 3, wave 4, wave 5 with the correction wave, A, B, C, an extension of, the D pattern, all that crap, CD legs. It adds, see, what people don't know, harmonics, it goes with Elliott waves. Y'all might want to write this down. Elliott waves, harmonics, Fibonacci are the main tools you need to be able to use as a trader. I don't really do Elliott's because I have my own form of levels. Okay. But Fibonacci and harmonics, you might want to learn. Funny thing is, I'm still learning harmonics. I had a guy in my group do a whole full harmonic course because I didn't know how to do it. The rule of thumb is, doesn't matter how much money I make, doesn't matter how much money you make, stay humble, always remain a student. So anyways, we're going back to the topic. No, I cannot just trade. I mean, I'm not going to get into that. Inbox me if you want to talk that stuff. But it ain't cheap either. But anyway, so how do we use fibs? Basically, right here, you drag from the swing low to swing high. There was no new. See right here when it did the double top, okay? When it did the double top, there was no more new highs. So right there, you knew that was the end of your high. So only thing you could do is you could drag from here and go up to here. Yeah, Jake. Where's Jake? Yeah, Jake's the homie. Yeah, Jake. Oh, and we're not gonna talk about Jake, man. That boy's a beast. He's on another planet. Anyway, so right here, I lost train of thought. Shit. All right, so right here, when the market went up, you knew it was exhausted because it did a double top. So you knew there wasn't gonna be no higher highs. So the only thing you're doing is taking your low and you're bringing it up to your high. And then right here did the double bottom inside of the zone. 61.8. This area, this whole little piece right here, that was your entry to get in on a buy. Eights, boom. As you can see, your trend lines, all that fun stuff. At the end of the day, you zoom out your charts and you see a bigger picture. This is just an H1, but I drew all that crap on the H4. So somebody asked, how did you know when to place a sell? Can anybody answer that for him? It starts with an L. I'm gonna like play around with it. So I'm about to do it since nobody wants to answer. All right, level 1. That was level 1. Market see big spike, market consolidates. Remember how I was showing y'all over there? Big spike, market consolidates. This is a double bottom. So this is why it was a market, it was time for it to go up. Double bottom plus it already did its course of levels. No, all jokes aside, like for real. You guys can see it here, level 1, consolidation, level 2, consolidation, real long consolidation, then boom, you're level 3. Level 1, consolidation, level 2, consolidation, level 3. All right. So that's why the market went up double bottom after that level 3, and it did it with news. Now, whoever caught the buy, which was really massively ridiculous, but it did 415 pips. Count these candles. That's 1, that's 2, that's 3, that's 4, that's 5, that's 6, that's 7, that's 8. 8 hours of work, 415 pips. One standard lot, that's 4,150. Okay. 2 standard lots, we're looking at 8,300. Me personally, I'll trade 10 standards. I'm looking at 41,500. 8 hours of work. That's why I love Forex. But I don't want nobody doing no ridiculous lot sizes if your account can't handle that. Focus on what they teach inside IML and GV and focus on that risk management. Don't become a high risk trader if you don't understand how to really move in these charts. I don't recommend it. You need to understand structure. I'm teaching y'all structure. All right, so right here, market shot up, and then we have a level 1 push. After it did its 3 levels of drop, right? Here's level 2. Made a high from that low. And here's your level 3. It made a higher high from that low. And then it pushed for level 4, my bad. So this level, give me a couple of seconds, let me figure this out. So I can give y'all a better answer. Yep, here's your level 3. So we got level 1, here's level 2. It never really broke this, right? It's still the same, pretty much. So this is level 3. Now, let's say the harmonic gave you a pattern. You'd be like, oh shit, it's level 3. Oh, it's all good. It looks good. It's a double top. What does this mean? It looks flat right here on RSI. Price was going up. Oh, snap, is divergence. It's divergence. Market drops. Game, check, set, match, right? Level 1, level 2, level 3. Let me zoom out. Let me zoom in. Level 1, level 2, this wick, believe it or not, it's level 2, created a lower low. Here's your level 3, here's your double bottom. Market went up, level 1, level 2, level 3. There was no double top, so a push to level 4. See that M? Level 4. Then we have level 1. Then we have level 2. Then we have level 3. Then we have level 4, 61.8. I didn't make that up. You saw me just scroll and count this. 61.8. Fibonacci. Precision. They don't want us to eat and catch pips. I'm showing you how to do this. So now you understand structure. I'm only going to stay on this webinar for like another 10 minutes. When it hits 1 o'clock, I'm dipping because I'm going to start getting ready for my own London session. I'm going to get some food too. Well, if you're confused on levels, I highly recommend you watch the replay. I counted off the H1. See these day breakers? See this? That indicates the level. See right here? It's between the day. That was a push for the day. Level 1. There was no new higher highs right here. So you knew it had to do 3 pushes. Here's your new, and this day right here says level 2. It made a higher high from here. There was right here, it never said it was dropping because look, it resisted off of this 23.6 fib. And then right here is your level 3. Because it made a higher high. So now your checks. Work is checked. And it took weeks to fill this all up. That's frustrating. I was in this damn trade and I got frustrated and I dipped out of here because I don't like being in this consolidation range. Double top to level 3. This is the money move. When everybody saw the double top, it was game time. Why? Because it is 3 pushes. You got your 1, here's your 2, here's your 3. It's like counting stairs. Walking up the stairs, guys walking up the stairs, and it gets to the 3rd flight. Now I just want to slide back down the stairs and then do it all over again. That's how you gotta look at your levels. Okay. You look for your confirmation on the setup after the 3rd level. If you feel that the double top did not happen at the 3rd level, there's gonna be a 4th. If the double bottom didn't happen at the 3rd level, there's gonna be a 4th. If the double top and double bottom happened at the 3rd level, and it happened at the 3rd level, there is no 4th. Feel me? So it's like a man climbing stairs and then sliding down the level to the stairs he climbs, and then climbs back up the stairs, and then slides down the levels like the levels he climbs. Wow, this tongue twist. Level 1, staircase. 2, right, man coming up the stairs, walking, right? 1, 2, 3. Then the man slides down. So we got level 1. Check this out. I can't make this up. 1. 2. Oh, my finger just got switched. All right, so 1. Here's 2. Ryan, how's that 2? Made a lower low right here on that wick for the day. Day breakers, lower low for that day on that wick. That was FMOC, by the way. Right? And hey, look, here's your 3. Okay? Can't make this stuff up. Right here. This is level 1. Double bottom. Divergence. Market was flat. RSI was pointing up. Momentum was going up. Price is flat. Momentum was going up. Divergence. Double bottom. Shot up. Level 1. Yeah, I look at, like I mentioned in the beginning of the video, all my work is done on the H1 chart. When I count all my stuff is on the H1 chart. The H4 chart, I'll just draw my supply and demand zone, some support and resistant areas. I don't count my levels there. I have no reason to. H1 is in reality where I'm counting my time off of hours. I want to get paid hourly, right? I want to get paid by 4 hours. I don't care about no 15-minute pay. I want my big fat check on the hour. All right, so here's two. Well, what the hell? Level 2, 1, 2. Here's your third. Remember I mentioned, oh, snap, the double top never happened? It never happened, right? Not only did it not happen, here's the zone. To draw that all the way out. It came inside of the zone, hit a level 3. The same zone I was trying to draw right there, and I'm extending more into the future. Wick, tip of body, like I've been mentioning the whole time in the video. All right, so we got 1, we got 2, we got 3. The double top never happened, so it came back, did a little dip, faked people out short, came right back up and killed them. Level 4, got your double top. And look, it came inside the zone, so not only did it come inside the zone, it did a triple top. Here's 1, here's 2, here's 3 hits inside that zone, and then it lights out. I can't make this stuff up. So you guys got to understand triple tops, triple bottoms, double tops, double bottoms. In this case, it's a triple top. 1, 2, 3. Did 1, it did 2, it did 3. And then it did a double top, but it said, you know what? I need to do another double top to the side of that double top. So that's why I did 1 hit, 2 hit, 3 hits to that zone, the last kiss, and then it drops. So triple drops. The divergence on RSI was right here. The market was flat, and then right here, market was going up. The momentum was going up. See, flat. That's what I mentioned. The exhaustion of divergence with mimic reversals, you catching the most because it finishes level. See, it did 3 levels of drop. It's now exhausting, so it's trapping the sellers. And momentum is already going up because they already completed its levels. That's why the banks and buy institutions, all no crap. So they're getting ready to buy. So right here, level 3, market is flat. As you can see, it's going up right here, and you're confirmed. You're good to go. Level 1, level 2, level 3. Your double top never happened. Look how all these aura bought areas, and then as you can see, the market was hella flat right here, and then look what happens. Over here, you got divergence as well. See that? Market right here was flat, and the momentum was already going down. More webinars, randomly, possibly, but it's not something I'm gonna do all the time. That's why I'm recording this, so I'm gonna make sure that y'all have access to it. Probably put it inside the GD page. I don't care if I make this public webinar for the whole world. I don't really care. Y'all can share it. But this is just a reality of how the market runs. Because I'm not going to be doing a lot of webinars. I have a lot of people that I have to worry about. So yeah, my template, I'm gonna post inside the group. This naked template. So anyway, so back here, 1, 2, 3, triple top. Yes, inside that horizontal supply zone, market drops. Here's divergence. Remember, starting the divergence, it was exhausted right here. Divergence as well. Market is flat. Here's the divergence, and market goes down. December 24th to 28th. Right here. Wait, 24th. Wait, what? It's really just one level. It's just four. Legit. There we go. See, 1, 2, 3. It comes back, touches that same zone. Okay, the same zone, pulls back, does this fourth level, and it finishes off a divergence. The market just drops. So there's your four. It just really acted as a triple top. The reason why it's a triple top did double, and it wanted to do another double inside of the double top, so it ended up becoming a triple top. And this is also called the last kiss inside of that supply zone, so the market drops, and it dropped hard. So let's just say you caught a sell off of just the analysis of that being done, you would have made 78 pips that day just because you knew it was divergence and you're good to go. And then it does this level 1, level 2, level 3, level 4, and 61.8. So remember that whole entire 61.8 that I drew earlier? That's why 61.8, level 4 happens, right? So here's your level 1. Here's your level 2. Here's your level 3. And then here's your level 4. $61.8 strong PRZ zone. Market reversed off of it. Now, you're like, okay, there's a lot of the market did this on the H1 chart. That's really what's made for the H4 chart, not really for the 1 hour too much. So 61.8, as you can see, reverse. Okay. And then went up, double bottom. And look, divergence. Hell of a lot of divergence. Super divergence. Massive divergence. It's undecided. All right, so let me clear this up. Delete this one. See right here, market is flat once again. It did remember 4 levels of drop. See right here, when it did the divergence over there, because it was exhausting off the fourth level, then it did this 4 levels of drop right here, double bottom. Look what it does. It finishes levels. The news go with the trend. A lot of people don't know that. News always goes with the trend. Plus, it's something called time zone trading. I trade from 10 GMT through 19 GMT. So what do I mean by that? Right here, 10 GMT, as you can see, when I use this crosshair, at the bottom of the thing, underneath the RSI, you see 10. And here would be your 19 mark. I would have been out the market right here. But here's the thing. Since I knew it was a mimic reversal, I wouldn't be out the market. I would ride this whole entire wave. Level 1 wave, level 2, and then level 3. I would have been at right here when the double top 40 happened. Why? Because I knew it was a mimic reversal. And then some people will be like, I'm going to go Google GMT. People, the NT4 time goes off GMT time, but in reality, this is focusing as a mentality towards the military time. Not really true military time for, but what I'm trying to say is meditative 4, focus on the time of meditative 4 does. So when you see the chart and you try to move across here to figure out the times, it will work anywhere in the world. It doesn't matter what hour you are. Just find the 10 and then trade it through the 19. Or catch a move reversal from the weekly low to the weekly high. I'm basically teaching y'all how to basically perform swing trades to catch hundreds of pips without a scanner. If you use it with the scanner and it gives you confirmation, it's pretty much game over. I guarantee you it's 95% accuracy. That's 216 pips of catching that swing. So right here, you got level 1, you got level 2, you got your level 3. And then the market, drops. Then you have your level 1, your level 2, your level 3. So let me mark that out. A lot of people's gonna be confused on that one. I'm gonna dip in 5 more minutes, and then I'll post the recording up on the site tomorrow. Well, not on the site. I'll give it to Austin or Arsalan, and they can do whatever they want with it. I'm just gonna have everything set up for y'all. Level 3. So you got 1, you got 2, you got 3. Nah, I really stay on Euro USD or I get on Euro CAD. Oh snap! All right, y'all didn't see that. Oh my god, fail. Man. All right, so that template I'm not giving out. That's a whole different ball game. But I'm teaching y'all naked without any indicators, none of that stuff. This is ADX or RSI, Bollinger Bands, and some moving averages. We're not gonna get into that topic though. That's a whole different type of story. I want y'all to perform naked analysis. All that other stuff is just confirmations. Y'all don't really need that stuff. WSA will be back up when Austin or Arsenal makes an announcement. I believe Q is working on that on his end as well with them. And he's also traveling tomorrow, so I don't know exactly when it will be back up, but I could get y'all an answer tomorrow, or I'll just text him. All right, so right here, 1, 2, and 3, we have our pushes down to the low. I'm gonna finish this up. These levels real quick. Got 2 more minutes. Level 1, or 3 more minutes. Level 2. Y'all can kind of see it. Like obviously, it's kind of redundant at this point. Level 3, and then you'd be like, oh, where's the double bottom? Right here, double bottom, and then it did another one inside of it, and then so you kind of see it. 1 double bottom, and then it's like it wasn't ready yet. Here's another double bottom. Why it wasn't ready yet? A lot of people will try to buy it right here on the level 2, and the reality is level 3. A pair that would correlate with Euro USD would be like USD CAD. So let's see here, USD CAD. Jesus Christ. God. All right, so you see how it's dropping. Euro USD was going up. And I haven't seen this template forever. All right, this is the money template. This is the template I give to my group. It's called 1K Day Training. I might give it to y'all as well, but I didn't really talk about it here. Shit. But 1, 2, and 3. Here's level 1. Here's your level 2. Here's your level 3. Does the same stuff every day, people. So just go over this video. Pretty much is redundant at this point. I did price action. I went over supply and demand. I went over RSI. Went over as much as possible. Fibonacci a little bit. Shit. What else I didn't go over? I don't really remember. Just understand that the market does these pushes, and you need to understand that this is always going to keep happening. Notice this is the 3rd level, but there was no double top. High to the 4th. Okay. In the same zones I drew, look what happens. It came back out. So look, it broke the zone, dip, came in, back in the zone, went back up. Zone, went back up. And then it did a 4th, but after the 3rd, it kind of dropped level 1, level 2, and level 3. And then it went back up. And then people were like, oh, only did 2 levels. Well, there was no double top here. So even if it did its 3 levels, it dropped. You could expect it to 4th still. It just was really dragged out. So there's your 4th, and then it does it again, level 1, level 2, and then it reset it hard right here. Oh man, I remember this day. I was expecting the 3rd, and I was like, damn it never happened. And I was still short, and I was like, all right, I had an exit right here, hit my stop loss. what template? 1K day template. Honestly, bro, I haven't used that in forever, so I wouldn't really want to talk about it. But level 1, level 2, level 3, and then level 4. Market drops, and then did a reset. Then it went up 1, 2, 3, 4. Then it drops. Then another reset. Reset, when like I mentioned, is 1 or 2 levels, and then it doesn't really care about doing anymore else. Then did level 1, then level 2, then level 3, and then finally had effects. It's like, yeah, we're dropping hard now. Double top, right? After all those fake outs. Level 1, level 2, consolidation. Level 3, consolidation. Level 4, consolidation. Elliott waves come into play a little bit. Now it's level 5. Then there's correction waves, A, B, C, and then it drops more. I'm getting too advanced. My bad. All right, so basically, my time's up. And then this is the current market. We're at the structure of resistance. So people, when you're trading today, don't really focus on buys. You're looking for short opportunities. It's getting ready to be a little bit oversold in the market, but there is no divergence. There's hella divergence right here, actually. Market is flat as hell. And right here it's saying sell me. And it possibly could drop. I believe it's going to be a head and shoulders pattern because this is a shoulder. Here's your head. And then what I think it's going to do is it's going to drop hard. There's already tiny divergence. And then I think it's going to form a shoulder. And it's going to come back down. And it's going to get around to this area structure somewhere around here. And then it's going to reverse back up. So you have like level 1, level 2, level 3. And then it's going to do it again and go back up. So that's basically it. And this is how I trade from day to day. Trading is very simple. It's not hard. It's not easy. 90% mental, 10% technical. Fair profit. Ryan is out. And thanks for watching the webinar.